village in Russia, the football club, the soccer club, was winning, and they became champion, and they became champions suddenly out of nothing. So if you think in the box, you say, okay, you know, they started to play soccer, and very well. He said, so we think out of the box. So in the end, they start inquiring, and what did they find? They found that a lot of sophisticated people from all the big cities were coming there because they were building a rocket base, and they made good soccer teams, and that's why they start winning. So they start thinking out of the box. So the two examples that you can think into the box, you can think out of the box. Now, it's emotionally very difficult to think out of the box because you have to say whatever the world thinks, they're wrong and I'm right. So that's why most people cannot think out of the box.
In other words, thinking out of the box requires thinking, whereas thinking in the box, there's not much thinking.
I was just going to say that, Morris, because you have to think. If you don't think, like Charles has a different method of cycle researching, then you're with the herd. Right, Charles?
Yeah, but you can think, but you have to think about the unexpected, and that's a total different way of approach of events.
So explain to us the 4-year cycle, or there's an 8-year cycle or a 50-year cycle analysis.
It's full of cycles. There's one simple cycle. You know, sometimes in September, October, there are big crashes, and sometimes you have them, and sometimes you have them not.
Okay.
And if you look, go back to 1900, you see that every 4 years there's a big cycle low, and there's kind of a crash in September, October. But because it happens every 4 years, so people are not sure if it's going to happen next year or not until they find the 4-year cycle. Then you have to come with the assumption, let's assume it continues until proven differently, which means is everybody will say this time maybe it's not going to work. Well, it's with everything. Going into a plane also, maybe this time it's not going to fly. So then you just have to assume that it will continue until proven that it will not continue, and that's another emotional problem. And then the third problem is that you have to tell yourself, all my research actually there's not much value because things are going the way they're going anyway. I'll give you an example of the last months. Months ago we started going long wheat, and we had been preparing that for half a year because the wheat cycle was bottoming, and we're looking for a 4-year bull market in wheat.
Okay.
Now wheat, since then, last 4 weeks, I think it's up like 80–90%.
So you were
and now
on.
we know why, because in Russia there was a lot of fires, and a lot of places were destructed, and now the wheat price is going very high because they cannot grow wheat anymore. So you can never come up with these things.
Are you saying the cycles is like preordained? I mean, is the market crashing every 4 years, or there's these 8-year cycles or 2-year cycles? Is it just preordained? You know, just like
it's preordained, and humanity will find out its own catastrophe. So later we're doing something wrong, or we assume something goes wrong, and then we say, oh, that's why the market came down. But we know that a long time in advance, we just don't know why it's going to happen.
So how do you filter out? Because you know, to be 100% all the time, Charles, you know, it's a little bit unrealistic. Nobody can be 100%, you know. But you must have a system also, or your logarithm that must filter out some of the noise. You know, when you're building in your equations. You know, if the market's going to go up and down, or oil's going to go to 85, or you're going to short oil. How do you filter out those things?
Well, I don't have to filter out anything. I just look when the next high is, and then I look what the price target is, and that's it. It's very simple, actually. I only look at the price.
Okay, so why so many people are so skeptical? Sometimes on CNBC they're like skeptical. They look at you like... Well,
there are two reasons. One reason is that it's hard for them to start talking with me about subject that they don't know. They want to pretend they know, and this is a subject they don't know. If they have a guest that talks about cash flow and Apple products and whatever, they can talk forever and ever because, you know, they can schmooze around it. But this is something they don't know anything about, so it annoys them a little bit that they have nothing to say about it. The other point is that people want to believe in free choice. And here I say there's no free choice, and they just don't want to accept that.
So, Charles, you specialize. We have a few minutes left, by the way. By the way, please give us a call, 514-738-4100, extension 200. You can talk about the stock market. We're talking about currencies and gold and so on. Charles, you specialize in wheat, gold, like you said before, going back as far as the 13th century. Do you really have to go back that far to do your research? Could be in gold, could be in anything, could be in any commodity. That far back?
Well, if you wanna pick the big bull markets that come, maybe 10 times in a century, you really need all this data. If you do normal research, then 20 years of data is enough. But then you only see the small moves, but not the huge moves. So, for instance, if you want to know if this bull market that started, well, we can discuss when it started. Let's say in 1929, at the low the bull market started. Is it all over or not? Well, we're only almost talk about 100 years. If you don't take a couple of 100 years of stock prices, you never know.
Okay, because I always feel like, in the industrial age till now, if you go to the 13th century, we're not talking about the industrial age, but in your case, what you're saying, these are cycles. It doesn't matter if it's industrial or we're looking at computer, the rocket age. Is that right?
That's correct. We have interest rates going back 3,000 years. We checked them, what they were in Babylon, what they were in Egypt, what they were in Israel, in the old Palestine. So it's a lot of work. And then you see that the major cycles, and believe me, you cannot change them. And it doesn't matter if it's Obama or if it's Bush. They cannot change cycles that are, going on for thousands of years. So that's very important to know. So then you don't listen to the noise, what the government is going to do, what they're not going to do, because it doesn't make any difference.
It's funny because it's Morris Kuzner here. When you listen to analysts or economists and everything, we're in a bull market and everything's running, you'd swear when you listen to them that it's never going to end. And then when we hit a bear market and things are going bad and it's going down, you think that the market's never going to pull out of it again. They don't go by cycles. They just go by looking outside the window and see what's going on.
It's all hype. By the way, Charles, what cycle are we right now? Just right now, what cycle are we?
Which market are we talking about?
Okay, you're right. Let's talk about the S&P 500. That's what I want to know.
Last time the S&P was at 1,200. I think it was the 26th of April. We went out, and I said we probably will not go back in stocks for the whole year.
Okay.
At that moment, we were also looking, and we succeeded in buying the 10-year bonds at 4%. And I told people, you'll be very happy for the next couple of years to get that 4%.
And you're right.
I don't think we will really go into stocks anymore this year. We have some stocks that we really like Monsanto and Mosaic, because we think this bull market is starting in the soft commodities. And a stock like Goldman Sachs that now could retrace a little bit, but that looks like it's going back to the old highs. It could go to 200. It can take a while, but it's going to get there. So we have certain stocks, but it's not overall that we invested in the market, and I think that's going to stay that way because from late August I expect a new correction.
Oh, we're gonna talk about that, Charles. My name is Samuel Zerza here from Radio Shalom. We have a great guest here. We have Mr. Charles Nenner from actually from Amsterdam. Mr. Charles Nenner is President and CEO of Cycle Forecasting, world-renowned market cycle guru. And you can find him on www.charlesnenner.com. My name is Samuel Zerza of Money and Business. We'll be right back in 2 minutes.
And you can find him on www.charlesnenner.com. Go ahead, Sam.
Yes, Charles. Don't you
just say it's cycle forecaster, not cycle forecasting. That's not important.
Okay, so cycle forecaster, right?
Yes.
So you write financial news, is that it? To your to the hedge funds and so on, is that it? Do you want to talk a little bit about that?
Well, what we do is about almost all the markets. We publish what we see on the computer. I print it out so everybody can see it. Okay. And 3 times a week we give exact projections where the market is going, if it's going up or down, how high it's going up, and how many days it's going up, and then what happens after that.
Right. So how do we get the email? I mean, do they have to go into your website?
Yeah, it's a very, very low key. You can go to the website. It says contact, and you can say you're interested. You get it 1 or 2 months. You're not going to be charged, and see if you can do something good with it. And after 2 months, probably you get an email. Are you interested to continue with it or not? And then they probably will come with a price.
Okay.
But if you want to see how it works, you can just request to get a trial.
So we go on your website, www.charlesnenner.com, is that it? And then we just...
No, actually for this you go, it's called Charles Nenner Research Center. The best is to go to Google and then put my name, Charles Nenner, and then you get there.
And then you get there, okay. So Charles, you mentioned that the Dow is going back to 7,000 on the Dow Industrial Jones, okay? And that would take us to historic norms in the terms of mean regression, right? So,
right.
So how did it come out with that figure, by the way? And are we going to overshoot to the downside? Let's say the Dow 5,000 or 6,000, because we always overshoot. Or it could be on the upside or on the downside. And what will trigger this collapse of 50%? We're talking about, we're talking a double dip or even lower.
Well, it started that I was on Met Hedge Fund, something like Met Hedge Fund. I think he has a radio show. And he came up with the fact that Mr. Precht, who actually did a lot for the Elliott wave, published in the New York Times that he thinks the Dow goes to 1,000. And then he says, "What do you think?"
1,000.
And I said, "Listen, if you put a line to the average of every year down for the last 150 years, it's a slope that goes up with about 8-9% a year."
Okay.
Sometimes it goes up, down, but in the average, the line continues. So I said, for many years I've been above that line, and we're still above that line. If we just go to the average, that means I take the average of every year for the last 150 years, then the average is now at 7,000.
Okay.
And I said, by the way, my calculation is 5,000, which means is that we only, like now, we're overshooting still by 3,000 points, and then we're all undershooting by 2,000 points. And he asked me that because he said, "Is this a good time to invest for the long term?" And then I said, "No, you only invest for the long term if you're below the average, the yearly average, not if you're above the yearly average, because you have to get back to the average the next couple of years. So it doesn't make sense to invest for the long term." So that's how it came about.
So when are we going to 7,000 there, Charles? I mean, are we at the 4-year cycle, or they call it nesting?
No,
all
it's much
the cycles.
more. There are two problems. One is deflation. We're going to have a deflation scare. And the other thing is, I also do cycles on war and peace.
On what?
And I found it interesting. And there are other people before me that collected all the data, also going back 1,000 years, even to the Chinese and Japanese war 2,000 years ago. And it shows that we start a major military conflict in about 2.5 years.
Okay, so in about 2.5 years, we're talking about there's going to be a major war in 2.5 years? Is that what you're
cycling? Yeah, starting a major war. It can start slowly, but it's going to be a major military conflict together with deflationary problems. So I don't see why it's difficult to get down to 5,000.
Well, that cycle research, on a personal note, starts somewhere in the Middle East? I mean, it's okay, just a personal thing, because
I think it's going to be it's coming from there.
Okay, so you're coinciding your cycle research also on war. You said war and peace. Why is that?
Well, I do different cycles. I do cycles on fashion. I do cycles for companies that want to issue a new record.
So give us an example.
So they tell me, it depends. Sometimes you come with a new. You issue a new record in May, it doesn't work, and then you do it in October, and it works. So also there are certain cycles, or you have to know if you want to have a man singer or a woman singer.
Wow.
And I predict the elections based on cycles, so all kinds of things on the site which are very interesting.
So you put out all together, and the Dow's at 7,000, is that right, in the next 2.5 years?
No, I say 5,000. I just say the average is 7,000, so don't be so surprised that I call it 5,000.
For people who are not shorting, what would you recommend that they invest their money in? Would it be cash, or would it be precious metals like gold and silver, or something else, oil, materials, real estate? What should people do?
Now, you see, since a lot of people didn't buy the 10-year notes when it was 4%, now, if you get, I don't know what it's today, 2.9, that's not a good investment. There's simply nowhere to go. If you have deflationary problems and everything goes down, so the best thing is just to sit in cash and wait for everything to come down and buy some bargains.
And do you see commodities going down as much as stocks, or less, and what about gold in particular?
Well, gold is a problem because I see gold going to $2,500, but there's a very good chance that first we go down to 800 or so. and that's going to be very painful for small investors. So that's also not a place to be.
So gold is going to
nowhere to go.
So gold is 2,500. So that means the U.S. dollar is going to collapse, right?
Not so sure. Let's say we get well, you mentioned the Middle East. Let's say you get the Middle East problem, oil problems, whatever, and everybody's gonna be frightened. So they're gonna buy the dollar, and they're also gonna buy gold
and silver.
And silver and platinum, etc., etc. So it doesn't have to be that way.
Do you forecast real estate? Because I have a lot of
also, if you, for instance, go to Google Charles Nenner Research Center, you see that I was in the beginning of 2006 on CNBC.
Yeah.
And I said, everybody out of the housing market, don't buy a house. It wasn't really picked up because it was not politically correct to say that, but it's still on record that I said it on television. And I don't think you should buy houses for many years to come.
Because you know
the same story. If you go to the average, you know, housing has to come down another 30-40%.
Because my next question was going to be the second quarter GDP numbers show the economy is not growing fast enough to create jobs and bringing down unemployment. Is that one of the fundamental reasons why not to buy real estate? Is that it? We're not out of the woods yet?
No, more real estate is that how many people can afford it. So if unemployment stays high, and then if the affordability, there's an affordability index that says if people can buy it or cannot buy it, and then the overhead of houses that still have to be sold. There's so many reasons why fundamentally you wouldn't buy a house. But the other thing is on the cycles, and going back to the average, the houses are much too expensive. So if you look, we talked before about long-term cycles. So if you look at long-term cycles of the last 100 years, that you see there was an upcycle. And within the upcycle, sometimes there were down cycles. You know, for 5, 6, 7 years, it went down and went up again. So people are programmed to know that real estate always goes up. Just the point is, the whole long-term cycle came to an end.
Yeah.
So what you have now is you have houses coming down with sometimes intermediate bull moves going up. But the major top has been set.
So you're saying
now for 20, 30 years, prices are going lower.
So the trend is down in real estate. We're talking America, Canada, or Europe?
Everywhere.
Everywhere. So what cycle are we in real estate? Again, is it the 4-year cycle, 20, 100-year cycle? Where are we now?
No, there are many. You can't say that there are many cycles, and they all topped. And the big cycles, you know, 60-year cycles, 40-year cycle, 20-year cycles, they're all down.
So it's nesting, right? There's a word I know I picked up when I did some cycle researching is nesting, and all the cycles come at once. Is that right?
Yeah, then you really have a major high conviction situation.
Okay, good. Please give us a call, 514-738-4100. My name is Samuel Izerzer here on Radio Shalom 1650 AM. We'll be right back in 2 minutes.
Okay. Financial, back at you here on Money and Business with Sam Izerzer. Sam's special guest today is Charles Nenner. We have Charles Nenner coming in to live and direct from Amsterdam. Mr. Charles Nenner is president and CEO of Cycle Forecaster Incorporated, world-renowned market cycle guru, and you can find him at www.charlesnenner.com. We also have Mr. Eyal Bar in studio with us today. Go ahead, Sam.
Yes, Charles, thank you for being in our show, Charles. You know that?
Hello, yeah.
Yeah, Charles, wanted to say thank you for being in our show.
You're welcome.
On Money and Business. And Charles, I wanted to ask you a special favor. Can you give us on Money and Business an exclusive forecast or a new prediction that you haven't given CNBC or Fox, that you haven't told them in Money and Business? Just a new forecast. Could be a stock, could be gold, could be anything that.
It's a problem because I usually give forecasts months or half a year ahead, so everything has been forecasted. I don't want to give you something that starts only in a year.
Okay, well, just something that will start maybe in September or something. Something that will start, something that will trigger. Could be the S&P 500, the Dow, could be the NASDAQ, Microsoft, Apple, oil, silver, just about anything. I just want to, No?
So let me tell you this: if you see a weakness in Goldman Sachs, the next couple of weeks, if you see it, I'm not so sure. I didn't look exactly.
Okay.
Then you want to buy Goldman Sachs because I think it's going to be a market leader again.
Oh, is that right? Goldman Sachs had some problem. Didn't they just pay about $1 billion in fines?
Well, 500 million, but That's like taking away from the bonus of every person maybe $100 or so. It's not so much.
It's not so much. Okay, good. By the way, I want your prediction on the U.S. dollar and the Swiss franc.
Oh, the Swiss franc is something I don't watch closely.
Okay.
The US dollar, I tell you that we are long for a while already Australian dollar against the US dollar.
Okay.
And I think not only that, we also bought the Australian bonds because the interest rates are still very high over there. And I think the Australian dollar can appreciate about 25% in the next year against the dollar.
Your favorite currency, is it the Canadian dollar or is it the Australian dollar?
The Australian dollar and the Canadian dollar, yes.
Both of them, right? They're intertwined because we're petrodollars and material dollars. Is that right? Is that because of that?
Well, Australia is very much connected to China for the commodities, and Canada is very connected to the economy of the United States. So they're a bit different. But they both look like they're going to outperform against the U.S. dollar for a long time.
So that means people here in Canada, obviously our listenership here on Money and Business and Radio Shalom and all over the global that are listening, that means we should be really selling the U.S. dollar versus Canadian. Is that it?
Yeah, you should hold Canadian dollars for the next year.
For at least the next year, right?
Yeah.
What about the euro? I had a lot of emails. Please ask Mr. Charles Nenner, the euro, should we sell it? Should we buy it? What should we do? This is some of the emails I've been getting yesterday and today.
Well, the euro has a short-term short-term high, the middle of August, and then it's going to see some weakness. But longer term, the euro should go up again.
Even with all the problems that they're having right now, with all the countries like Spain and Portugal.
Well, you know, the story is always this: you know as much as I know, as much as everybody knows. So we can only deal with what the future brings, and that we don't know. That's why we use the cycles.
Right.
So if you and I don't mean this is to be ironic, but if you know something other people don't know, then it's valid. But if you know that something that everybody knows, it doesn't make much sense.
So does your forecast for the euro did it hit a peak of your cycle research this year?
I have a short-term high in the middle of August, then a major low by end of September, and then the euro should take off for another half year again.
Wow. Go ahead, Eyal.
Charles, in one of your interviews that I've watched about a year ago or more, I remember you were talking about how China was piling up commodities, and also, of course, there's a big property bubble in China. So regarding this forecast, your forecast for the Australian dollar, don't you think it's vulnerable to a Chinese collapse since the authorities are tightening the market over there?
Well, again, you're not talking to somebody who's looks at all those fundamentals, because, again, what we ask ourselves and what we know, everybody knows, I don't know where it's going to come from. There could be some weakness in China, and not there could be. I expect to see some weakness, but that could temporary. And then, you know, if the U.S. becomes very weak again, you see the situation with the currencies. There's no strong currency these days. It's all which one is the less weakest. That's actually the problem.
Is that right? I had another email concerning the pound. The pound. Do you follow the pound also?
Yeah, but I don't really have it in my head, but I remember the cycle is up for a while, and we're going to see a stronger pound again.
Oh, really? Should we be buying the pound? Wow. And the Brazilian currency?
No, I'm not so crazy. I would stick with the first choice, Australian dollar.
Okay.
Then
Canadian,
and then this will surprise you, the yen.
The yen?
The yen, yes.
Wow, start buying the yen.
Yeah.
Okay, so you like the Australian dollar, Canadian dollar, you like the yen, you're going to probably like the pound. You're not crazy about the U.S. dollars and the euro. You're not really much crazy about. Is that right?
No, not for the moment. For the moment, not so. But in that order, the euro is also going to be on the list in a couple of weeks.
Oh, is that right? Okay, what about the shekel? I got to ask you about the shekel. I've been in Israel a few months ago. I did a show from there. I interviewed the chief economist of Bank Leumi, and he tells me the shekel is going to get stronger and stronger. I mean, it's a booming economy. What do you think about the shekel?
It's I think the shekel is okay. I think that not that strong, but I think the shekel is pretty strong.
Yeah, is the site?
And it's not a bad currency, but the problem is, you know, if you keep shekels, you don't get any interest in the banks also. These days, that's why the Australian dollar will still give you, I think, about 5% on if you keep cash in the bank. So that's why you want to be. First of all, the currency is clearly going up, and then you get a 5% interest on it. On the shekel, you don't get anything.
Okay, so what is your forecast on the Toronto Stock Exchange? Since we were in Canada here, the Toronto Stock Exchange and also the S&P 500 for the next year.
Well, Toronto, I don't watch that much, but I want to mention that all stocks actually move in tandem. All markets move in tandem. If a market goes down, then in Canada, the paper will say why the Canadian market went down. In Amsterdam, they will write why the Amsterdam market came down. The funny thing is nobody says they all went down and they're all connected. So I think they're very connected to the United States. Like I said, I expect a little more strength into the last week of August, and then you really don't want to be in stocks if you're in stocks already. And that's probably the same situation in Canada.
So you don't want to be in stock in the U.S., you don't want to be in stock in Canada, but what about commodities?
Commodities is also
commodity
difficult.
stocks.
I think the rally in crude is almost over, so you don't want to be there. If you want to do some long-term investing, you want to be in corn, beans, and soya beans, that is, and wheat.
Mm-hmm.
And if you don't want to be in commodities, you look up stocks that are connected to that. Like I said, Monsanto, Mosaic, and potash,
mm-hmm.
and you just stick with it. That's stocks you can stay in for the long run.
Okay, I just want to tell investors out there, if you have an investor advisor, please read your prospectus on investing, because some of the stocks that we talk about here on Money in Business, they could be risky, so please talk to your investment advisor. Charles, most investment firms and brokers are not equipped for another double dip in the market because most retail clients are long equities and mutual funds. You know that. What advice can you tell investors before the market reverses? In about a few minutes we have left.
Well, I'm not so sure that they're so much long in stocks. They have a problem because they're afraid to be in stocks, especially if they're a bit older. And in bonds, they don't get any return. What I want to tell them is, listen, I'm Dutch, and Dutch people first say, how do we not lose money? And Americans always say, how do we make money? And this is a time for the Dutch approach, just try not to lose money. There's no way that you can make a lot of money the next couple of years, and try to save whatever you have. Is
that right? Wow. So just, okay, you can buy treasuries, you're buying bonds, okay. No, you said bonds wasn't good enough, right? Okay. So just take cash?
No, at the moment, no, you don't get enough. The yield is nothing. I wouldn't do it. Right. The only thing I advise to buy is stocks that are connected to the grains.
Okay.
And then you're going to be very happy in 1 or 2 years, even in half a year. Just stay long those stocks that I mentioned.
And you'll be very happy.
Because the wheat, soybeans, and corn are just starting the bull market.
Wow, Charles Nenner, thank you very, very much. I know it's about 11 o'clock there in Amsterdam. Thank you very much to be on Money in Business, and I hope I know you're supposed to come again in October, right? Hopefully we'll talk. Maybe good news. Maybe the markets will be up a little bit by then. But thank you very much for being on our show, and I want to thank Morris Cousino from National Bank Financial.
Well, thanks for having me, Sam. It's always a pleasure.
Yes, and Eyal Bar. And next week, we're going to be talking about, we're going to have Mr. Richard Wilson, a hedge fund group. And we're going to be talking about hedge funds, okay? That's, I want to know more about that. And I want to thank everybody for listening to our show. My name is Samuel Izurda from Money in Business on CJRS, Radio Shalom, 1650 AM in Montreal. And happy capitalism. Thank you.
Shalom AM, Money in Business. Sam Izurda, let's get 'em. Oh, it won't be long before that money hits you. You reach a certain point where that money is an issue. Tax cut, inflation, learn about investment. Shoot another perfect show that can help them. Shalom AM, I'll be tuning in live. Sam Izurda, got the advice for you and I. Kick your feet up, listen to the speaker. Got questions, no sweat, take that number. It's real easy, it's 514-738-4100. Get connected, hit that extension, it's 200. Money in Business. That's what I'm talking about. Money, money. Money and business.
The opinion expressed on this program, Money and Business, are those of the host and his guests, are not necessarily reflect the opinion of Radio Shalom. Please read the prospectus before investing in mutual funds and consult with your financial advisor.